Sentiment among the nation's single-family home builders dropped to the lowest level in 5 months this month, in February, largely due to concerns over tariffs, which could raise their costs. Joining us now with his picks in the housing sector, John Lovallo, UBS home builders and buildings product analyst. Do you spend a lot of time worrying about tariffs, John? Is that front and center for you?
Yeah, certainly, and thanks for having me. A topic du jour. I would tell you, though, our view at least is that across the housing complex, tariffs are going to be pretty manageable. If you think about it, the National Association of Home Builders estimates that about 7% of the materials and equipment used in single-family construction are imported. I think from a home builder standpoint, the biggest kind of exposure, if you will, would be to Canadian lumber. So softwood lumber and structural panels, about 25% of that is imported from Canada. Importantly, though, the U.S. Lumber Coalition estimates that about 95% of that could actually be handled domestically. And so I do think that there are some mitigation efforts that can be put into place, some resourcing opportunities that can be put into place. And keep in mind that Canadian lumber is pretty heavily tariffed at this point at 14.5%. So the actual cost differential may not be quite as bad as people fear.
Can you just take an overall view of the housing market? And there's a shortage. It seems like you could sell as many as you've built. Why hasn't the industry satisfied what looks like amazing or very strong demand for single-family homes? Why haven't they stepped up? Where is in the supply of new homes? What's been the problem?
It's a good question, Joe. I mean, look, I think that the home building industry is a tale of two markets, right? There's the new construction market, which has done very well. There's the existing home market, which has been on its heels because of higher rates and sort of the lock-in effect. I think to your question specifically, the main pinch point has been at the municipal level, the ability to get land entitled, zoned, and ready to actually start the horizontal construction or the land development. That's been the biggest bottleneck. Also, keep in mind that labor is tight, right? We're looking at an industry that is probably 300,000 to 400,000 folks short of where it needs to be. On top of that, about 30% are immigrants. The percentage of illegal immigrants is not entirely clear, but it's something that we need to keep an eye on as well. So labor, land have really been the biggest pinch points of the builders being able to satisfy, to your point, that lack of supply.
Well, that sounds like a permitting problem. I mean, there's plenty of land. Why can't you build on it and buy it and build on it? What, zoning? Is it the local municipality? What they want their cut or something?
Well, so there's plenty of land, but there's not plenty of finished lots that are ready to build upon. And there's a little bit of NIMBYism, right? People don't want building in their backyard. But also keep in mind that, post GFC, a lot of these municipal the framework was actually dismantled and never fully kind of put back into place. So this is just an understaffed industry. On top of that, think about it. We're building homes today exactly the way we did 100 years ago. We have folks out on the site swinging hammers and nails. This is an industry that has resisted technology for forever, and probably has seen the worst productivity of just about any industry in the nation. And so we need to see technology infused into the business. There's been efforts to do it, but it's been resisted upon because of the fixed costs associated with it.
Okay, you have two favorite in the housing. You like Meritage, and then building products, Owens Corning, and you've got some pretty nice price level or price targets for both of them. Yeah. Why Meritage? What sets that apart?
Yeah, so Meritage Homes, $118 price target. That's about 60% upside. So nice return there if we're correct. Fastest growing among the fastest growing builders in our coverage. Go to market with among the lowest average selling price, which is incredibly important in an affordability constrained market. Also, real ability to improve the return on equity as they become more asset light. Also, as they instill this new policy of a 60-day guarantee, which is designed to deliver homes more quickly to compete with the existing home market. Stocks trading at a very punitive multiple, under 7 times earnings and just about at book value. So we think there's a real opportunity here for some pretty nice returns.